The Financial Planner, presented by the Bombay Stock Exchange, IPF. The Financial Planner, presented by the Bombay Stock Exchange, IPF.
Hello and welcome to Financial Planner. It's that time when we take up your queries, so hear this out.
Investment Ladder, presented by the Bombay Stock Exchange, IPF.
Well, Sumit, we have an interesting query and I will go step by step because there are very fundamental issues that are being discussed and asked. And this is from Arpit Sharma, who's 25 years of age. He started his job recently and I'm, as it is, would like to thank Arpit that he's writing us at this time with some basic questions, which is, I think, something that we should congratulate him for.
Sure.
And his basic question first is that he wants to invest in SIP. SIP is something that we've been talking about. He wants to know what is really an SIP. You know, systematic investment plan. More often than not, we've, I think, spoken about it regularly.
Sure.
But it's something that the investors still want to know. So let's start with that first.
Yeah. So let's go a step further, and start with more basic. Let's start with explaining them what a financial plan is, and then let's put SIP into this. A financial plan is a roadmap which families need to prepare for themselves, which tells them that financially these are the following steps they need to do in order to take them from a position which they are currently in their life to what they want to be in future. So this is a financial plan. Just to give you an explanation, there are various dreams and aspirations all of us as families have. We need to sit with a financial planner who will help us prioritize and convert these dreams into quantifiable goals. To give you an example, I have a dream of climbing Mount Everest. Cost of doing that, hypothetically today, is 50 lakh rupees. If I need to convert the dream into a financial plan or a goal, I need to say, okay, I'll climb Mount Everest in 10 years of time. And in order to do that, I need to save 50,000 rupees a month, which over a period of 10 years will help me amass 50 lakh rupees, which will help me climb Mount Everest. It's as simple as that. That's financial plan. Now, once you have a financial plan, in that when you need to save regularly to help you achieve that goal over a long period of time is something where SIP comes in. SIP stands for Systematic Investment Plan. SIP is a route which all of us investors over a longer period of time should ideally use to get into equity-oriented mutual funds and fixed income-oriented mutual fund on a regular basis. In a simple term, SIP is what a recurring deposit of bank is. That means every month you regularly invest, linked to a goal, and make sure you are disciplined to that.
Well, Arpit has come to his financial planning and has asked for our help on that. He's saying that his father has 6 years of retirement left. He does not want to depend on his father's income and wants to be independent. Now, what he said is that his future goal is his marriage, which is 3 years down the line, a small segment car, and for his own retirement. As of now, he's not considering on child education, marriage or related expenses there. And given the circumstances, he wants to know what should be the funds he should invest in. He's looking for decent growth. He's not too driven by greed, he says. So basically, he's, essentially not too much of a risk appetite is what he's saying right now. But I think at this age, he could do with certain level of risk taking. He's staying in Bangalore. His in-hand income is about 21,000 rupees per month, out of which around 7,000 per month are his expenses. And rest is kept in his account, which means a bank account may not be beating inflation at all.
Sure.
What are your suggestions and views, Sumit?
I think a very good point, Arpit, that you're conscious about your father's retirement and you don't want to really burden him with any of your expenses. At the same point, I hope your father has done good enough financial plan for his retirement, because most of the time we have seen in India, retirement planning is a very emotional subject, and most of the time we have also seen in India that for parents retirement planning is nothing but their sons and daughters. So please advise your father, if he doesn't have a financial plan, get one, and especially with retirement planning focus. Now coming to your goals, where you said about marriage, about small car and few of the other goals which you have mentioned, I think first step which you need to do is articulate two things into this. One is time, that is when are you planning to get married, exact time, and how much money do you need at that point of time. Because what that will help us is to articulate and convert them into monthly savings which you need to do to achieve that goal. And also what it will help you is to try and articulate and come to a figure what is affordable for you to do. It's very easy to say I need to plan my marriage. How much? Let's say you come up with a figure of 10 lakh rupees and somehow your savings are not able to help you to save that kind of money. So you'll come to a right kind of a figure. Do that exercise It'll really help you. It'll also help us to give you a better advice. And then we can structure and fit in SIP and fund into this. There are very many good funds. Fund houses like HDFC Mutual Fund, very good. Fund houses like ICICI Prudential Mutual Fund, very good. DSP BlackRock, Birla and IDFC. These are good fund houses with good schemes. We can focus and work on it. Last but not least, I want to highlight Priyal this case. He is not talking about his own retirement. Please do it so that you're not in a potential trap of planning your retirement when only 6 years are left.
Investment Ladder, presented by the Bombay Stock Exchange, IPF.
Well, on that note, we'll take a short break now because we'll be back with some term busters in just a bit.
The Financial Planner, presented by the Bombay Stock Exchange, IPF. The Financial Planner, presented by the Bombay Stock Exchange, IPF.
Welcome back to Financial Planner. Now it's time to sort of demystify certain terms that come across quite usually when we talk about stock markets. Well, Sumit, the term that we're talking about today is stop loss. We hear a lot of brokerages, etc., talking about, stop loss, etc. What does it really mean?
It's especially triggered towards retail traders and not investors. If you're investing for a long period of time, then you need to give stock a time to really play it out. But if you're a trading mentality and you're trying to make short-term gains by trading, then stop loss means, you're trying to put a figure. If stock hits that lower level, you will, get out of that particular stock. So your basic idea behind stop loss is trying to limit your loss.
Okay, that I agree with that. But when you're looking at an investor, who's a retail investor, he too may be advised by his advisor, maybe for a financial plan. Okay, now you need to get out of this stock once it reaches at this particular level, or if at all it falls. So would that not also be termed as stop loss?
It doesn't happen that way, and it should not happen in that way. What happens is, let's say I have a financial plan with a 10-year retirement goal, and somebody advises me, hypothetically, I'm just for the sake of example, I'm saying somebody advises me, Sumit, keep buying 2 Infosys share every month as a systematic investment plan. You can do systematic investment plan in stocks also by buying same number of stocks regularly every month. And if I keep doing that, it might be certainly there's some turmoil in the markets, and there's because of some news, market fell down 10-15%, and that particular stock, which is Infosys, also falls down 10-15%. Now, in that case, should I exit? Because from a trading mentality, it makes sense. But from an investment mentality, it doesn't make sense, because over a long period of time, there's nothing changed in Infosys. As a company, it's still doing what it is supposed to be doing. If I stay long enough invested, it'll go down, it'll come back again. The stock market is all about cycles. If you can pass through the cycle, you'll really go and make money. There is a definition which market uses in financial planning, which I want to reiterate. It's not about timing in the market. It's about time in the market.
In the market. I agree with that. But what happens, for example, an investor is given a wrong advice. For example, and that could be a case sometimes. When a particular stock or an investment that he's been given or advised is perhaps a penny stock, which is not really good in his portfolio. Maybe a stock which is not good fundamentally or does not have a business to answer. So an investor has taken a wrong decision in that sense, or been advised wrongly. What happens in that case? So in that case, how do you check and get out of the particular stock or so?
First and foremost, investors usually get a wrong advice when they themselves are not involved on a very active basis in their financial advice. So whenever you have a financial advisor / broker / financial planner, do not delegate 100% to them. Be aware, ask them a lot of questions before you decide on their advice, what they are doing. But God forbid you have got into a situation where you have a wrong advice which is not playing it out. Before you take the final call, do some market research yourself. Data is available on internet. Television channels like UTV, Bloomberg is blaring every day with various advices. Listen 3-4 days, talk to few other guys, take their perspective, then take a decision. Because many a time, a stock market is all about emotional, investing. You enter at the wrong time, exit at the wrong time, and that's what people get into, most of the retail investors, and they keep blaming the markets out about it. Please don't be emotional about market, be rational about market. If you are rational over a long period of time, you'll definitely make money. But long period of time is very important.
Well, we'll take a cue of Sumit on that, and also I like to add, if your friend is coming and calling you and saying a tip, do not just go blindly on that, right, Sumit?
True, I don't go on any tips. Forget about friend or whatever, no tips.
Okay, well, Sumit, on that note, thank you so much for joining us and guiding the investors and the viewers of Financial Planner. Well, that's all we have for this week, but we'll be back with some more, so keep watching this space.
The Financial Planner, presented by the Bombay Stock Exchange, IPF.